So let's go and get today's Minds and Money 5 at 5 show underway. So my name is Andrew Thake, and today's show is sponsored by Barrow Gold, Tirupati Graphite, and is brought to you in association with the Resource Global Network. This 5 at 5 forms part of our Minds and Money online global June event, running from the 22nd to the 24th of June, for which I'd like to thank our lead sponsor, Trade and Investment Queensland. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. To make it as interactive as possible, please have your videos switched on. To ask a question, you have two options. You can either submit them via the chat function where I've posted a welcoming message. You can even wave your hands via the invite participants function. I will unmute you and you can ask your question live. We'll also be having some polling questions throughout the webinar where you can vote. For today's show, we have a great lineup of guests. They are David Franklyn, Chief Investment Officer of Argonaut Funds, Terry Filbert, Chief Executive Officer and Chairman, Barrow Gold, John Forwood, Chief Investment Officer of Lowell Resources Funds, and Shishir Poddar. Shishir, I'm going to get your job title right. Are you CEO and Managing Director, or are you CEO and Executive Chairman?
It's Executive Chairman and CEO.
Executive Chairman and CEO. Shishir Poddar, Executive Chairman and CEO of Tirupati Graphite. So let's go and get the show underway. And let's start off. Can I ask my colleague Elaine to go and get our first polling question up to go and get your thoughts on a very, very popular topic. So I think the polling screen coming up now should be about price of gold, hopefully. Here we are. Nice question. Price of gold by the end of the year. Will it be higher or will it be lower? And whilst you're voting, I'm going to just turn our attention to our two investor guests and ask them to pick one news story in the mining industry that has caught our attention over the last week. So firstly, and I think you're going to be sharing some slides now, I'd like to turn to John Forwood, who's Chief Investment Officer of Lowell Resources Funds. John is a qualified lawyer and geologist, experienced in the resources sector. John, what news story in mining has caught your eye? Is it summertime blues for gold?
Yeah, look, I thought this one was a bit topical because we have seen a bit of weakness in gold and a few other commodities in the last couple of weeks. So this is from an article by CPM Group in New York. Jeff Christian is the main guy there, and I just saw this on Twitter. I like to follow him because he's a bit of a voice of reason, perhaps, or perhaps he's a bit of a bucket of cold water on some irrational exuberance that can creep into the markets sometimes. So he put up this chart. It looks quite dramatic. It's actually in increments of 1 percentage points, but it does show that on average over the last 30 years, gold and silver as well, and some other commodities are generally weaker at this time of year. So it is a, sell in May and go away sort of a story. Hasn't applied so much, certainly not last year or the year before, I don't think. But we seem to be seeing some weakness in the precious metals sector at the moment. And, based on this chart, you might say that weakness could be expected to continue through the northern summer, and perhaps start to see some strength back in the market when people come back from their summer holidays in August.
Mm-hmm. And just in terms of while we're on the subject of gold, can you just talk us a little bit about Low Resources Funds and so particularly what sectors of what sort of areas of gold mining investments are you looking at? My understanding is you look more at the gold junior end. Is that correct?
That's right, Andrew. We're at the we focus on the junior end. We like to take perhaps more risk than other investors may be comfortable with, but we're looking to be compensated for that with commensurate big returns. So we're really in the pre-development stage of the project cycle, and generally we're investing in companies that have a sub $200 million or thereabouts market cap. And look, we do we do like gold. We're not traders, and we haven't sort of suddenly bailed out of gold for July and August. We still have nearly 50% of our funds under management exposed to the junior gold sector. So we are, I certainly ticked the box on the poll at the start of the 5 at 5 to we're expecting a stronger gold price later in the year and longer term as well.
Yeah. And just in terms of your just like another question about your focus, is it just on ASX listed companies that you invest in, or do you invest across the exchanges?
Look, we're based here in Australia, so we do have more familiarity with ASX companies, but our mandate is pretty broad. We have a number of TSXV and CSE companies in the portfolio. We have had and will have in the future AIM and LSE listed companies, and we even have a few unlisted stocks which are at various stages moving towards an IPO.
Mm-hmm. Thank you very much for that. Bringing in our other investor guest, I'll just go and give you his brief bio background. David Franklyn is an executive director and head of funds management at Argonaut. David is the fund manager for the Argonaut Natural Resources Fund, which is a high conviction investor in the Australian resources sector. David has over 25 years investment experience. David, I'm not sure if I think you may have some slides that you want to sort of share, but what would be your news story of the week that you would like to highlight?
Yeah, look, I just think, as you can see, I think that you can see the screen okay there. But
we're having problems with the screen share, but if you're having problems, my colleague Elaine can perhaps try to share the slides for you. George, right. Just give it another go.
Yeah. Might just. Sorry, just bear with me. Yeah, I'm having troubles sharing this. I'm not sure why.
Well, maybe I can ask my colleague Elaine, see if you're able to help out on doing the screen sharing. But I guess I'll be just kind of like back to you, Dave. Just keen to see what your key news story of the week.
Yeah, look, I'll just kick on, and if they come up well and good. Look, I think we've all seen a lot of talk around increasing demand for commodities, in particular copper, on the basis of the green, clean energy transition. But I think what's perhaps not as well understood is what's happening on the supply side, and particularly in copper. And so that's really my news story. Really, over the last couple of months, you've seen some activities in South America, where Peru's just gone through an election. It accounts for 10% of global copper supply, and basically a Marxist leftist leaning candidate, Pedro Castillo, has won, and his mandate is really to increase taxes on the mining sector. So that's causing some uncertainty. Chile, which accounts for 25% of the copper market, is currently debating an increase in the tax rate there from around 40% up to a possible sort of 70% or more, which we think also has the potential, if it comes to pass, to have an impact on the development projects there. And then some of the other countries like Mongolia, where you've got the Oyu Tolgoi mine owned by Turquoise Hill and controlled by Rio. There's been ongoing negotiations for a long period of time about the terms and conditions of expanding that mine. And even in the Democratic Republic of Congo, you've got Ivanhoe Mines just starting production from their Kamoa-Kakula copper project, at a time where the DRC government has just announced bans on export of copper concentrates. So I think broadly what you're seeing is that many of the locations that are rich in natural resources, and particularly resources that are important for that global transition, are in locations where there's political and social unrest and instability. And that stems from the vast social, racial and regional inequality. So I think what's emerging, I think, over the next 10 years is you've got new demand drivers kicking in at a time where supply could be impacted, and that's very good for price and for investors in the sector.
And then in terms of how does that then flow back into Argonaut funds? Does that mean that you're taking more positions in copper mining companies?
Yeah, look, so basically, you know, a couple of seconds on Argonaut. Argonaut are a Perth-based stockbroker, corporate advisor, and fund manager. Our funds management business is relatively new. We kicked it off in January 2020, and just looking to grow that. We sort of take a top-down versus bottom-up approach, and so what I mean by that is, you know, we target the commodities that we think have a good long-term future, and that includes things like copper, nickel, you know, battery materials such as lithium and graphite and rare earths, and then also, you know, opportunities and services. Can you get that next slide on? Is that yeah.
Mm-hmm.
Yeah. And so that's the way we do it. We target the commodities that we like exposure to, and then we find the companies that best fit that. And what we're really looking for is a company that has either great assets, great management, or great value. Now, typically it's difficult to get all three at the same time. Sometimes you get that when you have a market dislocation like we had during you know, the COVID crash. But in general, you've got to compromise. So that's really you know, how we develop our portfolio. The key investment themes, which we've kind of touched on, you know, we, much like John, you know, we're a supporter of gold. We have about normally between 20 and 25% of the portfolio in gold. And that's really on its characteristics as being a store of value, where we see that, you know, the market, there's market risk at the moment. You know, valuations are high by historical standards. You've got really a potential turning point with inflation, questions over whether it's transitory or structural, what that might mean for interest rates and therefore markets and asset values. You've got, you know, the COVID variants potentially coming back, and then the normal typical events that can impact markets, such as terrorism, cyber attacks, natural disasters, new pandemics, and high debt levels. You know, so we think it's important at this stage in the market to have gold in the portfolio. On a 10-year or more view, though, we think the green energy transition is where you want to be positioned for some of those reasons I was saying. So, yeah. You know, I think what you're seeing is a coordinated support from China, the EU, and the USA as far as that transition. It's a very politically attractive target for stimulus spending. You know, governments can spend the money, but they're getting some support from their public. We've talked about the supply risk for key commodities, and it's a long-term trend, right? So we just see increasing demand, constrained supply means that if you can find good quality producers, you should do pretty well. But then I think in any portfolio, you also need to have an element of opportunism. So we also look for areas outside that, and that typically accounts for sort of between 10 and 20% of the portfolio. So at the moment, I think the best time to buy a commodity and a stock is when it's out of favour. So we're always looking for those. You know, we're looking at sort of a couple of gas companies that supply the domestic gas market in Australia. Deterra, which is a royalty business, is just listed in Australia, and we think that's being mispriced by the market. It has a royalty with BHP and their iron ore project in the northwest of Western Australia, which is probably one of the highest quality royalty streams yet. And then I think mining service companies also in Australia look undervalued. So that's a bit of a snapshot, Andrew.
Okay, excellent. Thank you very much for that. And we'll be coming back to David and John later on in the show. So let's going to move on. Sorry, let's get the polling result up, Elaine. Let's forget that. Let's see what the polling result was. I'm assuming it was higher because our audience strike me as being very, very optimistic. Can we 78% higher? That's always great to hear. So that nicely segues into our first mining update of the show. Terry Filbert has been closely involved in the mining and exploration industry since 2005. Significant on-the-ground experience in Indonesia, in addition to his extensive knowledge of East Asia's main projects of Sangir and Meanwhile, Terry brings his entrepreneurial skills from a series of successful business ventures that include technology, import-export, and human resources. Terry is now Chief Executive Officer and Chairman of Barrow Gold. Terry, the floor is yours.
Thank you, Andrew. Barrow Gold is a near-term production exploration play in its Sangiet Gold project of 835,000 ounces per its 2010 NI 43-101, with an additional second larger project with 3.1 million ounce resource per also its own NI 43-101, but projected to be up to 10 million ounces, according to Eric Sprott some years ago. This is our Miwa Gold project in North Sumatra in Indonesia. Barrow Gold's just received in February its 30-year contract of works production license for 42,000 hectares on Sangi Island, North Sulawesi, Indonesia, and is now in the land acquisition stage, with construction commencing with the next within the next 60 days, while targeting to have its first gold pour by the end of the year. Our initial mining and production area approval was for 110 hectares, consisting of two 60-meter deep open pit mine areas. These are all at surface oxides with an average grade of 1 gram a ton, which our sweet spot is. This is our sweet spot for basically, we have a dual 100,000 ton heap leach pad system. And we'll be employing about 160 workers and managers, of which 70% actually be hired directly from this island. With initial production target of about 1,000 ounces per month at 80% recovery, using artisanal production methods to start, so I get my cash flow going earlier. Then we'll basically install a Merrill-Crowe plant. It'll take about a year to put in, and we can then scale the project up to about 4,000 ounces a month within 24 months, at an average cost of about $800 per ounce. And once I'm back in Indonesia, hopefully someday, been out here about a year and a half in the outliers of Seattle, I will also continue our discussion, restructure, and bring the Miwa project and exploration activities back on track. So getting started to work on that 3.1 inferred ounces and try drilling out to see how many of the ounces we do have. See if Eric is right. And any questions?
Great. Well, thank you. That was a really great. That was a really great sort of like summary, and it sounds like a fantastic investment opportunity. If I can perhaps go to our investor guests first. Just going to, maybe I'll go to David first from Argonaut Funds. Thoughts on Barrow Gold, and then any sort of like questions that you might have for Terry?
Yeah, Terry, I thought that was very instructive. I'd be interested to get just a bit more detail around how you're finding operating in Indonesia, and what other big sort of gold projects are in the vicinity of your project.
Well, I'll answer the second one last. We actually are based on the gold reef that goes between Mindanao, Philippines, and North Sulawesi. There's about 1 million years ago, about 20 volcanoes spurred up magma, both a lot of gold in it. And so basically, we're right in the middle of that. Actually, we're 200 kilometers south of Mindanao, 200 kilometers north of North Sulawesi. And there's probably around 10 major mines across those two. Some which are doing anywhere 10 to 20,000 ounces a month. And they're all using the same type of, and actually I was mining in North Sulawesi before I took over East Asia, which is now Barrow Gold. And that was the same type of material and same type of methods.
Yeah, okay, thank you.
And working in Indonesia, by the way, is wonderful. The mining department's great, really good to work with. The last 10 years, it's improved remarkably. So I would recommend it.
You could have talked in one of your slides there, Terry, about your Indonesian management experience. Can you just go into a bit more detail there? Because to me, that seems absolutely sort of key, the fact you've got this fantastic on-the-ground mining experience. But perhaps you can just explain in a bit more detail.
Well, first of all, our board is fantastic too. I've been very lucky. We actually have one of the ex-CEOs of Anglo Gold, John Ellis, and he's got a world of experience in mining across the world. Also, John Keane came in with him, Joe Keane came in with him. Joe basically is probably one of the foremost experts on heap leaching. He built the first heap leaches systems actually in Mindanao back in the 70s. And I think the first one's in the tropics outside of Nevada, and which is good. It's the same gold reef, the gold reef we're on right now. He also built the largest heap leach pad in China. So everyone on my board has had Indonesian experience. So everyone understands the challenges, also the opportunities in Indonesia. Before I left, I left Indonesia to close the funding in 2020 January. So I left on December 2019. And when I left, basically, I thought I was coming right back and got stuck over here for a year and a half. But before I left, we thought we'd start mining right away. So I pulled a core team with core values and the culture I wanted. And they're in place, waiting for us to, we finally got the funding in. And that core team, even though I can't get over there, has been building, every step of the way, the permit process, they finished it, and I've done everything from this room. We raised $6 million. We got our permit. We got our license. We started from this room. It's amazing. If you told me 2 years ago to do it, it's impossible. But here it is.
Yeah, it's sort of like it is just amazing as to how much work you can actually sort of like do via Zoom. There's one of your questions from the audience. I'll go to one. I think that you may slightly touched on earlier, but it's good just going into a little bit more sort of depth. Can you just go over like Barrow's sort of cost or like profile again? But also I think in terms of just going on about the I'm gonna mispronounce it, the Sangihe cash flow and the sort of like cash flow production start.
Okay, well, we're running, when I was in North Sulawesi running my own operation, I actually was running at 550 an ounce, but it was actually a smaller operation. At the same time, it was also not a federal license, which has a little more requirements in it. So my costs are, right now, we're going to start at 800, about 850. But I believe we'll get that down towards the mid sevens to maybe the low sevens. But again, when you start out, it's always going to be more expensive. And then basically our cash flow is we're at $800 or basically at this amount, we're at $1,000 free cash flow per ounce. At 600 ounces, a month, if we just have a 50% recovery, that's still basically $600,000 out of $1 million. And so that, and a lot of that's okay. We have a drilling program we're gonna be doing. Once we do the first gold pour, we'll start a 35,000 meter, 13-month infill drilling program between Benibas and Bawani corridor, which is going to bring 835,000 ounces that are inferred resources up to measured and indicated. And then after that, that's the first phase. Second phase goes, and that's 1.2 kilometers. Then another phase is an area which there was no drilling on, so there's no 43101, but it's the same anomaly. That's 1.4 kilometers. And that basically, we believe is going to bring in, and that's between Bawani and San Laurent villages. I should have left that map up. And that would basically get us to about, Frank Roca, who's our geologist, and he used to work for Barrick for about 8 years, he worked with us in Africa. He opened up 4 gold mines. He believes after we get this area drilled out, we'll have about a million ounces on the bottom line, measured and indicated. Forward statement, that's a forward statement by everybody. But basically, just if you didn't read the data before. But at the same time, that's only 10% of our area. The other 90% of the area is still to be explored. We have illegals everywhere, unfortunately. They're basically wonderful little people, and they have picks and shovels, and they go off and explore on their own. And they're as long as they stay out of your area, they're okay. But unfortunately, they get in the way sometimes. We try not to run over them with their trucks. So they're just try to also help them as best we can.
I'd like to bring in John. I'd like to bring in John Forwood from Lowell Funds Resources. You've been sort of listening very, very intently in the background. John, do you invest in Indonesia? And I guess the question is and the follow-up question is, what questions do you have for Terry?
Yeah, look, it's refreshing to see a company active in Indonesia, because we don't see many Aussies up in Indonesia at the moment. It seems to have not be a destination of choice. So I was really interested, Terry, to hear that you've got a COW, contract of work. I was under the impression that wasn't a license that was available anymore. So can you tell us a bit more about that?
Yeah, unfortunately, they stopped issuing in 2005. We're a 6th generation, and 7th generation was 2005. Ours issued in 1997. So they don't issue them because, unfortunately, with the contract, it works the contract. They can't just jerk it away from. They got to take you to arbitration. And lots of times the contractors were taking the Indonesian government to arbitration and losing. And so they decided they didn't like that very much. 2009, they changed it. Well, they first came with the KP, then IUP in 2009. And that's what's in the system they've been using since 2009. But they're wonderful. Contractor works. That's when the first I saw that, I wanted it so bad. You get all kinds of cool stuff. You get a refinery license, you get export license. I can have my own port. I mean, you can build your own little country with it. It's basically, it's really well done. I mean, I wish they still did it that way. You know, we will basically be developing this for 30 years, but they just passed a new regulation in March that can get extended 20 more years. So I actually have a 50-year, you know, 50-year that's contract but license, you know.
That's great.
Another question, sort of like my end, is who are your key shareholders? I think I saw that Tocqueville are one of your key shareholders. Is that correct?
Tocqueville, when I first took over, Tocqueville was the main shareholder. They've been diluted down a bit, and they basically have, you know, they basically they've been very involved with us though. And then Palisades, they just came in September. They were actually our lead shareholder, and we thank you very much, by the way. You know, they were the lead, and they helped us get over the top. And you know, with that money we raised, we're able to go into production. So no, we have we have about, I know, about 52% of our shareholders. We have a couple groups that I work with, and then we have a whole bunch of new shareholders. I have no clue who they are. I keep talking to new shareholders, amazed guys that have 1 or 2 million shares. So give me a call if you're a shareholder.
When you talk about new shareholders, are they sort of, I mean, how is your mix between retail shareholders and institutional? And where are your sort of shareholders like spread over the world? I don't know if that second question is fair, is an easy question to answer, but just interesting, you, I guess maybe more in your like retail institutional mix.
More retail. I mean, basically, we have some more institutions coming in before, but we've picked up a lot of retail, and they're mostly in Canada and the US, and I'd say probably 3/4 in Canada, maybe 20% the US, and 5% other. I've been talking to several in Singapore. You know, so we're starting to get, you know, some people in Singapore interested in us. In the US, and we have institutionals, a number of them in Europe. You know, but they're smaller holdings, you know, basically 1 million or a couple million shares. So yeah, it's just, but yeah, we have spread across the world, but mostly in Canada.
Okay, excellent. Well, look, thank you very much for that. And certainly any kind of company that's backed by Palisade and also Tocqueville as well, definitely must have something going for it. So sounds a really, really fantastic project. We'll also be looking to go and come back to you later on the show, Terry. There may have been 1 or 2 questions I wasn't able to quite get around to asking you during your segment, but you can actually answer them privately in the chat box function in the sort of bottom of the screen. Okay. I'd now like to bring up, I think, a second poll of today's 5 at 5. And Elaine, I think if you're able to get the polling up, hopefully it's going to be a nice segue into our next presentation. Elaine, are you able to get the polling question up? Okay, Elaine is shaking her head. I think we had some internet issues. The question was going to be about, do you go and invest in graphite, which would have been a lovely lead into our next presenter, who is a world-recognized expert in the flake graphite industry. Shishir Poddar is executive chairman and CEO of Tirupati Graphite. He's got a deep understanding of technological, commercial aspects of the industry, considerable experience. I think it's expanding 27 plus years and counting, working with natural flake graphite in various spheres like mining, processing, and marketing of this commodity. He also has considerable experience within the financial analysis and project construction. So I think whilst giving those intro, I think Shishir, I think you can see your slides up. I am assuming that if that polling question had been up on the screen, you would have been voting yes, that you do invest in graphite, and yes, you expect the price of graphite to go higher this year.
For sure, yes. I mean, we are huge investors in what we do. So, you know, our interests are very jolly well and aligned with our shareholders. So, you know, as founders in our company, we still hold a substantial stake. So, and thanks for that introduction, Andrew. I'm a man of graphite, you know, all my professional life. This is what I have done. And that's what we've learned the hard way. And trust me, expertise of graphite is not something that you can shop around the globe anywhere, because it's a very niche area. And you know, the situation of what we've seen on the climate change, the threat is real now, it's not for the next generations to see, it's for us to see. And I think the entire community around the globe needs to be very conscious, and so are we. We need to mitigate that. What is special about graphite and graphene is that they contribute very, very strongly in the green economy. And that has been an opportunity for us. The green economy is set to grow, and it will grow at very fast pace. I think all our fund managers around the globe need to look at how you will have the resources that you need for this green economy. And we as a company are meeting one of the important constituents to this. Let me speak a bit on graphite and graphene, how they contribute to the green economy. You cannot have efficient energy storage without graphite. Every form of rechargeable batteries historically, and the one we all know about today, that's the lithium-ion batteries, uses graphite as one of its largest constituents. You talk of renewable energy. In the new age, the hydrogen energy, you need graphite in the fuel cells. There are new developments going around on the solar panels. There are new developments going around in the wind energy, which all need graphite and graphene as material inputs. Graphite and graphene do also contribute in reducing the consumption of fossil fuel in many ways. Composites, which are replacing metals, reducing weight, they reduce your energy consumption, thus the fossil fuel consumption. Coatings, they help you enhance the life of various materials, which actually means that you need to use less resources. On the other side, apart from this, the risk of fire has been glaring too. Our conventional flame retardant products are basically halogens, and they have a very big quotient of emission in case of a fire. Yes, they retard it, but they are toxic. Graphite-based flame retardants have proven to be the most non-toxic flame retardant substance, and we very recently saw, as an effect of certain events, the United Kingdom announced a $5 billion package to improve the fire retardant quotient of the country, which actually means a lot of graphite goes into it. Such are the applications where graphite and graphene, they contribute to a greener world, and we must be conscious of it. We at TG are a fully integrated graphite and graphene company, possibly one of Gasker, where we are building it to a 84,000 tons capacity. It's modular, step by step, over a 3-year period. We are producing, we are selling, we are making money. On the downstream, you need these processing, high-tech processing to make the graphite usable for the high-tech applications. There are more than 150 applications, but these high-tech applications in lithium-ion batteries and flame retardants and similar, they need very deep processing. That's what we are developing in India. We already have an operation and they are expanding. And on the graphene side, it is the world of advanced materials that will help us even further in mitigating the climate risk. We've developed a unique technology to manufacture graphene of very high quality in a non-chemical treatment method. And we are developing advanced materials with graphene impregnated in it. There's a lot we do, but I would like to share this one recent development which we announced recently. Aluminium and copper, these are the two conductors we use globally, and copper is the elder brother. We have been talking about it. David spoke about a lot about copper and the threats towards the availability supply risk. What we worked on was, can we impregnate graphene into aluminium and improve its conductivity to an extent that it could reach close to copper? And we successfully did that. The advantage that comes is aluminium is 1/3 the weight of copper. And applications in conductivity are volume sensitive, not weight sensitive. Thus, what we have developed means it could offer an alternative in weight sensitive applications for copper. For example, let's take an electric vehicle. So a sedan like Model 3 has about 180 kilograms of copper in it. If that copper can be replaced by this composite, the weight of that car will come down by 120 kilograms. It's very significant. That means with the same battery pack, you can run the car for at least 10-15% more mileage. It saves energy, it saves cost. It's a huge development. We will continue our endeavors on developing, advanced materials, and there are a lot of targets, and we'll continue developing graphite.
Can I just quickly interject? There's a question that came in from the audience that was just relevant to that previous slide. So I don't want to ask it now because it just sags in very nicely. Question from Joseph about the graphite aluminium composite. He's asking us to how it's going, but has it been successful in cable form?
That's what we are doing right now. So the first step was to invent the material. A lot of research centers globally with industry and universities have been trying to do that. And we actually achieved this breakthrough. It's right now, the material is made. We are making tens of kilograms of it, and then it will be formed into application-based forms like wires, like pipes, for thermal applications, into cables, and that's what is the next step.
Okay, and just make sure that I understand this correct. Is this basically unique, and only Tirupati Graphite are doing this, and nobody else is doing this aluminium graphite?
Yes. So to my knowledge, we have been tracking about 40 to 50 other centers that have been working on developing this. But they haven't been able to break the technological barrier, where actually the carbon of graphene, it chemically reacts with aluminium and it gets into the aluminium carbide form, or aluminium oxide is generated. That technological barrier has been very difficult to break, and we've done that. So to our understanding, we are possibly the first.
Okay. Yeah, I'm sorry to keep interrupting your questions. We're getting so many questions that are sent in by the audience. So I hope you don't mind if I keep on firing you questions from the audience, but there's some really kind of good ones. And apologies if they are covered on your next slide. Just answer them in your next slides. But do you have an IP registered for this?
In the process of making a patent application. So there are many patents that we are in the process of making application for over the next couple of months. Otherwise, the knowledge base is within our company. It's a development made in-house. So yeah, it's very well protected.
Yeah. And again, I'll just take one more question that's been sent in by the audience. We're getting quite a few sent in. Do you envisage acquiring any further graphite projects to diversify jurisdiction risk, or add any further tons to your resource base in the near term? That actually segues into a question that I was going to ask you about Madagascar as a mining jurisdiction.
So I have been in Madagascar for 6 years now, working there. To date, we haven't faced a challenge, and I can, admit that it has been conducive, possibly because we have been very fast-working investors there. So we have a very big repute and respect in the country. They actually classified us as an investor of repute or something like that, which is actually very useful. The other few important things about Madagascar, they offer mining permits for 40 years. The royalty rates are very reasonable. It's just about 2%. And to date, we haven't faced any difficulty, nor have we come across any other mining project, which is actually delivering on the ground, have any problem. Having said this, while Madagascan graphite is also one of the best in the world, we are very conscious that we need to mitigate our basic resource country risk and also diversify our type of resource. And that's our stated strategy. We are looking at things.
Okay, thank you very much. So I think you said you had got one more slide that you wanted to show. Sorry, sorry for interrupting with so many questions. I was just trying to sort of say the questions in as you were presenting. Sorry about that.
No problem, Andrew. In fact, I had almost finished. The last slide was just some key points about us as a company. So, we are producing, we are selling, we have quality assets. We have a team with more than 150 years of collective experience. We have a very well laid, defined development plan. We've proven that we are the lowest capex and the lowest OPEX company in this space. So we have a lot of traits behind us. And I can say that we are also very conscious about the ESG quotient of the company. And we have scored a lot. It may take time to get into more details, but in one word or in one line, we have brought in smiles on the faces of thousands of people who were barely clothed when I first saw them.
Okay, that's sort of like excellent to hear. So on that positive note, I'm going to go to our two investor guests. David, do you invest into graphite sort of projects, and what questions do you have for Shishir?
Yeah, look, we haven't invested at this point, but always on the lookout. As it's always a challenge to find, a good quality asset in a location that you're comfortable with, and with good people managing it. So, I think this project looks quite interesting. I'd be interested. Obviously, you've covered off on a lot of information, and you've had a few questions along the way. But could you just give us a summary of what's happened with the graphite price and the graphene price over recent times? And could you also just touch on the role of synthetic graphite and what impact that might have on the industry?
Right. So as far as prices are concerned, David, over the last 6 months, there has been about a 10 to 20% upside on different grades of graphite on the price front. What we see is that there is increasing demand in these high growth sectors. And it depends on how fast new production can come in, possibly over the next 1.5 years or so. We are looking at a glaring gap between demand and supply, and that would push up prices, at the max within that period. However, I can also say that the current prices of the market for prudent producers is cost efficient, and you can, have earnings out of it. It's a very balanced price in the markets, I can say. The second question, David, was about?
Just whether you see synthetic graphite as being consideration.
Yeah. Sorry about that. So, synthetic graphite, there are two things that I would like to speak. There are very few applications where there is use of either natural or synthetic or both. Lithium-ion batteries is one of them. Where natural graphite scores over a synthetic is it hasn't gone through the emissions that a synthetic graphite manufacturing cycle takes you through. Synthetic graphite has so it's something like this. What Mother Earth has done over millions of years, you're trying to do by use of energy. You're heating other form of carbon to plus of 3,000 degrees centigrade and under very high pressure. And you take about a few months to convert it into graphite type of molecules. Having said that, what I see happening today in the world is more or less equal distribution of synthetic and natural graphite are being used in lithium-ion batteries. And based on my discussions with experts around the globe, we see this getting in favor of natural graphite to an extent of at least 60%. So that's what is happening.
Yeah. Great, thank you. It's good.
Thank you very much for that. Perhaps I can bring in John Forwood. What questions do you have for Shishir?
Yeah, thanks, Andrew. Shishir, that's a fascinating snapshot. Certainly the first I've heard of the aluminium graphite composite. It sounds very exciting and fascinating. I've got one question on that, and then perhaps one question on the market. In terms of the aluminium graphite composite, is it an energy intensive process to make that product, or how's that looking in terms of cost of production?
So it's truly not, John, and it's not a graphite, it's a composite of graphene. Graphene is basically a few atom thick layer of graphite. So it is, if graphite is a book, graphene is a page in the book or a couple of pages in the book. So the process we have developed, John, it's not energy intensive, it's scalable, and it's a non-chemical process. I can't divulge details about it at this stage, but the process is I can say, different from what others have been trying in the space, and it's a very unique one.
Great. And just a question about the market, in particular, your own market. Have you got, where's your offtake going to? And I don't know if perhaps, you know, we hear a lot about, you know, China dominating commodity markets, but you know, any comment on, you know, growth or otherwise in the graphite sector in India?
So our markets are global. So what we produce in Madagascar goes substantially to end users around the globe, the United States, the European Union, the Asian countries. What we currently produce in India on the flame retardant products, that goes into India, and right now we are engaged in developing markets in the European Union. We actually achieved REACH registration for that a couple of months back, and we are in the stage where we are, you know, at different customer levels. About 20 of them we are in second stage of qualification. In some we are in the bulk trial in ton scale. So we always have our markets global. Another fundamental differentiator with us is we look at developing markets with end users directly instead of intermediaries. So we have that ability because of our understanding of graphite and because of our reach in the you know, ecosystem of graphite. Otherwise, you know, for graphene, graphene is a new material, and you know, its applications are under development. Current globally, it is estimated of about $650 million market size, and it's growing at plus of 20 CAGR according to most of the reports you would see. So that market, as of today, we're not selling graphene commercially. We're working with various industries, various possible application units to develop markets for it.
Okay. There's another question that's been sent in by Alistair. What is the state of the ongoing OTC application for Tirupati, and can an update be expected soon?
For sure, yes. The application has been filed. It is under consideration. There are certain processes it has to undergo at the exchange level, which is ongoing, but being a LSE listed entity, we have the eligibility for it, and we do not see any concerns. But yes, you can expect an update in a few weeks from now.
Okay, excellent. And I've got a question. This is a question is actually for both you, Shishir, and also for Terry from Barrow Gold. I'm always interested when I hear these mining updates. There's obviously lots of sort of like positive sort of news, but there's always, you know, some sort of like problems. So I guess the question to you is exactly the same, is what is the biggest risk to your project and how are you de-risking it? So I'll go to you first, Shishir, and then I'll go to you, Terry. So what's the biggest risk to your project and how are you de-risking it, Shishir?
So if you see our journey, we were incorporated in London in 2017. We acquired our projects, and you know, over the 3 years next, before we listed, we actually did everything to de-risk the future development. That went to the extent that we established a small processing plant and mining facility at one of our 2 projects there, so as to ensure that the bigger modules that will follow on, we have established our ability to establish those projects in a jurisdiction which was new to us then, and we have the ability to start the next stages of development. Otherwise, you know, as a management, de-risking larger investment has been our fundamental, and moving step by step has been our fundamental. As a result of that, with very smaller, much smaller initial input investments, we have been able to establish the credentials. Having said this, while you know, I would also like to share that COVID has not impacted our operations in Madagascar. In India, yes, for a couple of months last year, we had to close down our operations. That was by government orders, but otherwise we've been operating throughout this pandemic. All said and done, unless heavens may fall or, you know, there's a big threat of uncontrolled nature, I think we are substantially de-risked.
Okay, thank you for that. Then the same question to you, Terry. What's the biggest risk or the biggest risks that Barrow Gold faced, and how are you de-risking it?
Basically, people seems to be probably the biggest risk we have, is getting the right people in place quickly enough. That's why we're very happy to have had a good team in place, but being able to bring in the right people at the right time. Also, COVID has affected movement in Indonesia, mainly because it's all a series of islands. So getting people basically to our sites sometimes is delayed. So we've had a number of delays because of COVID. They've actually shut down the boats and the airport sometimes. So getting the project up and running hasn't been such a risk, but having the people in place to be able to keep it going smoothly has been the problem. How we've tried to reduce the risk it is hire ahead of time, but again, if things get delayed, we have people waiting around. So it's timing also to get the people in place. So that's the main risk we have right now. Everything else is in place.
Okay, thank you for that. I'm going to ask a slightly similar question to our two investor guests. I'm going to John first. How do you de-risk your investments? Are there any particular red flags which, if they come up in your research, your analysis, you say, right, I'm not going to go and invest in this mining company, or I'm going to go and sell my shares in this sort of company? What are your red flags, and how do you go and de-risk your mining investments?
Oh, look, yeah, there's numerous red flags, and they pop up more often than not. So you're probably saying no more than you are saying yes.
What are your sort of biggest ones then?
Yeah, look, I think most important thing is management, and if you're seeing red flags, really just against management commitment. That's probably the best way to sum it up. If you've got a question mark against the commitment of management to the company or the project, then that would be a major one.
Okay. And from yourself, David, what are your top couple of red flags that you look at which cause you to sort of rethink about a particular mining company?
Yeah, look, I mean, clearly management is a key factor. Some of the others are location. So, where is the project located? What do we see as any geopolitical risks associated with that location? And then probably more of an internal issue is just debt. Really what you don't want to see is mining projects that are carrying too much debt, because there is risk associated with the process, and that enhances that. From a portfolio perspective, you obviously don't want to be overexposed to any particular project. So you've got to be pretty unemotional about the investment.
Yeah. With some of the countries you were talking about earlier, let's say Peru, for example, isn't the upside that obviously Peru has become more risky now that they've had a change in government, but isn't that then factored into the share prices of companies in Peru? So you've got that trade-off, or has that not happened yet?
I think it's still a question mark. I think you've seen the whole copper market obviously come off a little bit, but there's a couple of. I don't think you've seen that flow through, because really the decisions have yet to be made as to what impact that might have. But there's some good examples. In Canada recently, you've seen some announcements regarding some coal projects there. Grassy Hill, which is owned by, or Grassy Mountain, which is owned by Riversdale, Gina Reinhardt, and some smaller ones, Atram Coal, etc., where the licensing process has fallen over, and there's been significant deterioration in value. So, I think what happens in the higher risk locations is, one, you get the risk of the project not proceeding, but you've also got an ongoing lower market rating because of the potential for ongoing risk. And so the question is whether you want to play. But your point is a good one. Ultimately, you got to play that off against the value opportunity, and that's always an assessment you got to make.
Well, thank you very much for that. I think we're now coming up to sort of the 55-minute mark, and I guess the end of today's show. So all that remains for me to do is to thank David Franklyn, John Forwood, Shishir Poddar, and Terry Filbert. To also thank our sponsors, Tirupati Graphite and Barrow Gold, and also to thank our media partner, Resource Global Network. I hope to see you in the future 5 at 5. In the meantime, either have a great day ahead, or if you're in Australia, have a great evening. Thank you very much for your time. Thank you. Bye-bye.